Hello, my name is Rachel Lara. I am a real estate agent here in San Diego. I work with Keller and it's my mission to provide you with all the information you need um, to confidently make the real estate decisions for you and your family. So today we are going over what happened in August so that you are prepared for the September of 2021. And we'll start with the basics and then go into the details and then end with what it means to you. So in July, the median sales price for a single family home was at that high of 875, and in August it is 850. The first time it's been down from a previous month in forever. Definitely all this year, and it's been a while since we've gone lower than the previous month. So, and then for a condo or attached home, I might have just blown that one. So we are in July, it was 550, and now in August, now we're just going all over the place. In August, it is 560, so it still went up. That 560 is the highest that it has been. Now, for the details of the market, new listings are down. We have less listings coming on to that came on the market in August than we have had previously, or at least July was our highest. We had almost 3,000 houses come to the market, and now we are substantially less. So it's about 500 less than last month and 500 less than a year ago as well. My arrows just are not working today. My apologies. Pending sales are up because we did have more houses come on the market in July, so sales are up, or houses that went into escrow are up, and then houses that sold in August are down. We're down roughly about 200 from last month, and then also about 200 from last August as well. So it's funny that a lot of times the month is reflecting what happened last year as well. Now, so that means that we have less homes on the market for sale. Not a shocker. And you can see this is 2019, 2020, 2021, substantially less each year. And this is historically, this is from May of 2013, historically very low inventory. This is why we're seeing so much pressure on prices, or have been. Now, closed sales are down. I'm touching the arrow to go that way, and it's just not. So days on market, that is up slightly, but really only slightly. We're at 20 days for single family homes, 18 days for condos, and you can see that this is historically low, and then year over year we're still low. Now this one is a little bit interesting. This kind of shows you the breakdown of price point in days on market. So this under 250 is over 30 days. That's mostly because those are the houses that need the most help and aren't move-in ready, right? Nobody's moving into that thing. A lot of these have been in the further East County and in need of repair. Now, most price points were under a month, and it's not until this is, so 22 days, 27 days, still under a month at the one over a million, under two. It's not until we are over 2 million that we go to 46 days on market, and then over 5 million we're at 89. So days on market Still very low, except on those both ends of the market, or both ends of the price points. Now, month supply, a balanced market is 5 to 7 months. We are at 1 month for both, and we've been that way for a while. And this is, again, why we are having such a hard time finding homes and such. Now, we can also see that, I'll also share with you that it's only when we're at over 5 million that we're at that balanced market area. So, are leaning towards a buyer's market in the 5 million and above. Median sales price, so this is just going into more detail. We already talked about it being $850 and $560 for attached. Still higher than it has been, and on other videos where we talked about the 4% appreciation year over year is kind of how homes go, and when we go above that trend line is where we start to see, we might see a correction. The condos have kind of been appreciating in that. It wasn't, it's single family homes that received that big spike there. Now we can also, San Diego is huge with lots of diversity in the market, and so you can see that single family home, this is single family homes again, because it gives you, I think, the most representation. And so in North County Coastal, which is from Oceanside down to Del Mar, Fairbanks Ranch, it's 1.575, which is down off its high. North County, which is Fallbrook to Escondido and out to Borrego, that is up and equal to its high at 110,000. North County Inland, which is Scripps, Rancho Bernardo, Rancho Palos, all of that, that is 1.2, and that is up from last month but down from its high. East County, El Cajon, La Mesa, Santee, Lakeside, that is at $750 was the median price, which was equal to last month and at its high. Inland East, which is very diversified, which is why we see so much, as we go further east, we'll see more volatility in the median price, and just because it depends of where they're being sold. So it goes from Alpine to Jacumba, which I think we had at least 3 or 4 of the lowest sales price homes. So it is up over last month and down off its high. The median sales price is $730. Coastal South, which is La Jolla to Point Loma, it is up again at its high of 2.25 million. Now, a lot of that is being from La Jolla, a lot of that activity there. Metro, which is Claremont, Tierra Santa, Mission Valley, that is down off its high, and the median sales price is $933,750. Metro Uptown, which is from Mission Hills out past San Diego State into San Carlos, and into San Carlos, and its median sales price is equal to last month and down off its high at $890,000. Metro Central, which is downtown, Bankers Hill, and then Lincoln Heights and Encanto, that is up at its high of $657,500. South Bay, which includes Coronado, and I maybe should want to do the disclaimer that I didn't create these because I would not have broken them up like this, but Coronado, National City, Chula Vista down to the border, that is $782,500, which is at its high, and Inland South, which is down over last month and down off its high, which includes Hamul out to Campo Potrero Tecate, and that is at 640 as its median sales price. So you can see a lot of difference depending on where you're selling as the median price. Oh, I guess I haven't told you about what sold. So these are the highest priced homes that have sold. There was 21 houses that sold over 5 million last month, and there was 14 that sold over 6 million. And you can see days on market went from anywhere from 212 to 0 days. Not quite sure about the 0 days. I'm a little bit skeptical of those. But you can see that the highest price was $9,075,000. That sold in Encinitas, and it had a additional small little unit as well that was under 1,000 square feet, roughly 800 and change. So highest prices at Escondido or Encinitas, but we can see there's several in Encinitas, Del Mar, Leucadia, Rancho Santa Fe, La Jolla. So it's kind of those are the areas where we were in the $6 million price range. Now from there we will go to the lowest priced homes for sale, and the bottom I think this is 14, maybe no, this is 15. The bottom 15 ranged from 120,000 for a single family home to 400,000. Most of them are in the backcountry and desert. They are in Jacamba, Boulevard, Campo, that's the high desert. They're in Borrego, which is the real desert. They're in Palomar and Julian, and then there's one in Ramona, and like Chula Vista is probably the most like closest to the ocean, or the most central kind of, and it listed at 300 and it sold for 375. And then we also had one in El Cajon that was listed at 380 and sold at 380 after a day. So again, it's interesting how those happen like that, but that is kind of the lowest spectrum of the San Diego market. Now, percent of original list price received, that's how much, if it's listed at this price, how much is the winning bid that it goes into escrow and closes with. And so the high was 105 as a San Diego median. It has now softened to 102.5, so that's a little bit lower. We have all heard of the stories of going hundreds of thousands over, but for the most part, it's still been pretty close to the original list price. It's just that before it used to be in the 90s. Historically, we're somewhere in the mid 90s of where list price is, and now we're still above 100% for the median in San Diego. That too is reflective of the middle part of the price ranges. Once we're above, I think it's 2 million, it's below 100%, and at that very lowest price point, we're also seeing it to below 100%. Distress sales. So this is one of the things that people are worried about, is the bubble bursting like it did in the past, because the growth was unsustainable, and also with COVID, people put a delay on their mortgages with the forbearance. And so what does that mean for our market? If all those came to market, what would that do to us, our home prices, right? So this is distress sales, and we're at 190 for the county, which is lower than 5.2%. We're closed sales because we have less houses on the market to sell. We are also selling less of them, or closing less of them, but we're still closing more than we're putting on the market. So now the areas with the most of these, 13 out of the 163 homes that sold in downtown, which is a lot of condos or attached homes. So 13 out of the 163 that sold last month, that was a chunk of them. And then also in La Jolla, 11 of the 118 houses that sold during this month came from there. Actually, yeah, not sold, that came on the market. These are the new listing inventory. So 13 new listings came from downtown, and 11 of the 818 that came to the market in La Jolla. Now, places like, again, Warner Springs, all of that far east county, backcountry, they have the highest percentages of distressed house sales on the market, because they might have one, but it's 1 out of 5. So that's kind of how that market is going. Mortgage rates, which is our next slide, are still historically low. Not as low as they were in the beginning of the year, but still very low. So it is a factor both for our buyers and for what you want to do with the market. Now, affordability, housing affordability, this is because it's mixed. So houses were slightly more affordable than last month, because at least for single family homes, because our home price went down, right? So we're slightly more affordable, but very low off of where we used to be. And still not as, so June was when we were the least affordable. Now, and it's the interest rates that are keeping it somewhat affordable. So overall market, this is just showing it all in once of all the details we just went over. If we had more inventory, we could see maybe a little bit softer prices, but still very strong indicators overall. What does it mean for you? As a buyer, you're probably getting less beat up. If you tried to buy a house and it was just too hard and you decided, or if all the horror stories said don't do it now actually might be the time to be in talks, find out about interest rates and what's affordable to you. If you're a seller, there's less houses on the market and prices are still super high. There's no crystal ball that will tell us this is the highest it's going to be, but the data looks pretty good. So if you have been thinking about it and you want to do it, now might be the time. Now, homeowners, if you're current homeowners, you still have a lot of equity. Can you use it wisely? Maybe. And then if your interest rate is over 4%, give us a call, because you need to be refinanced so that you can, get a lower interest rate, lower monthly payments, or use it for something like an investment home, or to add on another unit so that you can rent it out or whatever it is. If you are under or around 3.5, it still might be a good idea. Still call and talk, because, would it be a good time to lock in a 15-year at these super low rates instead of a 30? What's going to be best for you? So those are kind of what it means for you. If you have any additional questions, please feel free to either contact me at my phone, text, or email, or leave comments below. If you're still here, thank you, because 20 minutes is a long time. Like and subscribe. We will be doing one of these a month, and then we'll also be having other information coming on. I am getting over my fear of video and having my face places, So, thank you, thank you, thank you. Have a great rest of your September. September in San Diego is absolutely my favorite because we have the fall in the mornings and the night, and you can still warm and go to the beach. It's just the best of all worlds for me. September is always my favorite. So, enjoy the rest of your day, and I will be seeing you soon.